Book your session here with our expert loan officer, Blake Albertson. I'll put the link in the chat to book a time to talk to both myself and my loan officer. Number 2 is get pre-approved. Getting pre-approved for a mortgage is truly the first step that you should take if you're serious about buying a home. First-time home buyers, however, are often intimidated by the amount of work that it can take to get their approval and end up shuffling this important step to the end of their to-do list. We lose so many home buyers because they can't get their paperwork together. They don't even start it. And some just think it's too early to worry about. This is definitely a costly mistake. And I can't stop thinking about you, Blake, so I'm going to turn it over to you.
Hey, I appreciate that. So yeah, step number 1, book that call. Talk with Todd. He's gonna send you over to me. We're gonna work on step number 2, getting you pre-approved. And during that pre-approval process, we do look into the first-time home buyer qualification. Let's get you some of that down payment assistance that the state offers. If they want to give you money to buy a home, let's use it. So once you're pre-approved and we've got the down payment assistance working with you, you and Todd get to go house hunt. And that's the really fun part of it. You get to go find, if you like a split bedroom, if you like a big front yard, small front yard, 2-story, 1-story, all that. Once you find that home that you just can't live without, it's time to submit an offer and negotiate some terms. And lucky for you, you've got Todd on your side, master negotiator. He's going to get some great terms for you. And then you go under contract. Now, this is where the nitty gritty really starts, and we start finalizing that financing for you. We put a lot of work in for about 30 days, and then you get to go close on your home and sign a bunch of paperwork, and then you get to move in. And last but not least, you do get to enjoy your life after making such a great investment. Mistake number 1 is ignoring the first-time home buyer incentive. So what is down payment assistance? Well, it is specific to your region, and your region specifically being your county. There's an area median income that regulate the limits on income for that area. So it is dependent on your income. Now, the down payment assistance does come in 2 forms. It is a forgivable second mortgage and a grant. The forgivable second mortgage is forgiven as long as you live in the house for 3 years. If you refinance or sell your home within those first 3 years, then you do have to pay that back. So just live there and you get that money. So how do the first-time homebuyer programs work? Well, Freddie Mac and Fannie Mae both have their Home Ready and Home Possible programs. And I use the T-Shack program in tandem with FHA a lot to get you guys the down payment assistance. And the T-Shack, or the down payment assistance program, works with all of these. So here's an example. Anita wants to buy a home. I got her approved on an FHA loan. It's a purchase price of $300,000. So the minimum down payment is 3.5%, which is $10,500. The FHA upfront mortgage insurance cost is 1.75%. So that brings the total loan amount to $294,566. Now, the incentive that I got her approved for is 5% of the total loan amount. So that comes out to $14,728. So now the total down payment is covered by the incentive with $4,228 left over for closing costs. That could be escrows, origination, title fees, anything that's in that closing cost to really help you get into that home.
Hey, Blake, so I was just going to let them know we just had a very similar transaction. This woman wanted a condo for $200,000, and I kind of figured we could get it for $190,000, and that's as low as they would go. And she needed help paying for a down payment, so she qualified for down payment assistance. And then we also did $10,000 in seller concessions. So what we did was we gave the sellers $200,000 loan, even though we were only giving them $190,000, because they gave us back $10,000 for closing costs and in down payment, but she already had down payment assistance. So she ended up not paying any down payment, and she got her first month's mortgage free. And that's one of the incredible things we can do here. And if she lives there for 3 years, she doesn't have to pay it back.
Yes, very true. All right. So yeah, another happy customer using the dream team here. So types of mortgages. Well, there are 4 specific types. Number 1 is conventional, and that is Fannie Mae and Freddie Mac. They set the guidelines for what are called conventional loans. Number 2 is FHA. So this is a government insured loan. So this means there's going to be an upfront cost, an upfront insurance cost. And we'll go through we'll compare those here in a second. Number 3 is another great loan. It's a USDA, so it is government insured. So there is that upfront cost, and it is area specific. What I mean by that is it's only for rural areas. It is a 0% down, and it is designed to help rural areas grow and flourish. Number 4 is a VA loan. It's only for qualified veterans and active duty military. Again, it's a government loan, so there is an upfront cost, but there is no down payment with that. And keep in mind with these 4 loans that requirements may vary depending on the lender that you use. So with each of these loans, we do need certain documents, okay? And here's a general list of documents that we do need. So we do need your driver's license and social security card. We do need your residential address for the past 2 years. We also need an income verification. So we need the name and address of your employer for the past 2 years. That's every employer for the past 2 years. We are going to need 2 months of pay stubs and bank statements for your checking and or savings account, whatever you're going to use for the closing costs. We will need W-2s for the past 2 years. Copies of the most recent tax returns are generally for self-employed people. So we'll probably ask for a profit and loss statement for your business and those tax returns. And any additional income like child support payments, alimony payments, social security benefits, stuff like that. And then last but not least, a list of any asset that you think will help strengthen the loan. A car, a boat, an airplane, a helicopter, hovercraft. If you have a hovercraft, I want to go for a ride in it. But these are the documents that we will need.
Yes, and if you need any of these slides, just comment in the comments below, and I'll email them or send them to you.
So the Federal Housing Administration loan, FHA loans provide mortgage insurance. The FHA loan provides mortgage insurance on loans made by FHA approved lenders like me throughout the USA. So the benefits of an FHA loan. Well, first of all, it's a low 3.5% down payment with a credit score of 580. Credit score as low as 500 with 10% down. Now, keep in mind, these are rock bottom scores. Can we get the deal done with these scores? Absolutely. Is it going to be a really good deal for you? Probably not. We want you in the 640 and above range, because that's when the deals get really beneficial for the home buyer. So there is easy refinancing with the FHA Streamline. There are lower mortgage rates. The higher DTI ratios are accepted with this. And you can choose between a 15 or 30-year fixed rate or adjustable rate term. Now, we're not in an adjustable rate market, so we really don't tap into that just yet. Down payment assistance programs or grants are accepted with this loan. Like I said, I use the TSHAC, the Texas State Affordable Housing Commission, in tandem with FHA. And then seller can pay closing costs up to 6%. Like the deal that Todd was talking about earlier that we did. We got her those seller concessions, and it went right towards her closing costs. We were using an FHA loan on that.
So up to 6%. So the loan was for 200,000. So we could have done up to 12%, but we just did 10. Or 12,000, but we just did 10,000.
Conventional loan. A conventional loan is a home buyer's loan that is not offered or secured by a government entity. It is available through or guaranteed by a private lender or the two government-sponsored enterprises, Fannie Mae, Freddie Mac. So let's look at some comparisons, FHA versus conventional. Minimum down payment on an FHA is 3.5%. The minimum down payment with those first-time homebuyer programs on a conventional is 3%. Minimum credit score with FHA is 580 and conventional is 620. Keep in mind, we want you 640 and above. That gets you the better rates, that gets you the better pricing on loans, saves you money in the long run. The maximum debt to income ratio on an FHA is 55% and conventional is 46%. Loan limits for 2023 are $472,030 for FHA, and for conventional, it's $726,200. Income limits. Now, these are that FHA and conventional don't necessarily care how much you make. They're not going to put a limit on how much you make. The more you make, the better. These limits are for the down payment assistance program, and this is for Dallas County. So with FHA, it is $97,400 with the DPA, and for conventional, it is $76,480 with the down payment assistance. So minimum out-of-pocket contribution for an FHA is that down payment, 3.5%, and conventional, it is 3%. And both of those can be gift funds, grants, or those forgivable second mortgages. So what you can and can't use for down payment and closing costs. Well, first of all, most people use their checking and savings accounts, and we do need those financial statements, those bank statements, the 2 months of bank statements that we said we need in those documents. So that's generally what most people use. Now, you can use your 401k or retirement accounts. There are terms of withdrawal required with each of these, so we will need to know what those are. You can also use a gift from a family member. Financial statements will be required from the donor. So as you're talking to people who want to help with closing costs or down payments, make sure that they know we're going to ask for their bank statements from there. We need to know where the money's coming from and where it's going to. You can use stocks, bonds, or cash. We will need financial statements with that. Now, when I say cash, it's not cold hard cash. You can't show up to closing with a duffel bag of $15,000 and plop it on the table and say, here's my down payment. It needs to be documented. We need to know where the money's coming from and where it's going to. And we don't know where the cold hard cash came from. So it needs to be in the form of a cashier's check that we can see it came out of your bank account. Things you cannot use for down payment and closing costs. That is a loan and a credit card. You can't borrow money to borrow money. It's a weird cycle. Plus, this will mess with your credit scores and your debt to income ratio. And like I said, you can't use undocumented cash. So buyer's eligibility based off underwriter review. Well, number one is your ability to repay the loan. And we look at that through employment verification, your total income, and your total monthly debts, and your proposed payment. And that all factors into that debt to income ratio that I've been talking about.
Hey, Blake,
number two is your, yes.
sorry, what is underwriter? What is the underwriter review and what is an underwriter?
Oh, great. Yeah, great question. So an underwriter, what they do is, I get you pre-approved and I tell them, we're going to work with this bank on this program, FHA, conventional, USDA, whatever it may be. And I hand the file off to the underwriter. What the underwriter does is they go through line by line and make sure that everything is meeting the guidelines that are set by the FHA or Fannie Mae and Freddie Mac. They make sure that we're hitting all our DTIs. They go through and calculate your income again, make sure that everything is perfect and ready to go. That's exactly what an underwriter does. So we send the file to them, they look at everything, and sometimes they have questions like, well, there was a gap in employment, for 1 month, last year. Why was that? So they'll come to me and they'll give me what's called a condition on that, and I will give them an answer. Usually it's a letter of explanation in that case. But they give us conditions to make sure the loan is good to go. And then we resubmit, and they're the ones that give us the clear to close after all the guidelines are met. So the guidelines on being able to repay your loan do fall under the DTI in there. And then number two is the willingness to repay the loan. So your credit report, what does that say about you? And then your payment history of previous loans, your rent, your bills, stuff like that. Also, what is the property used for? Are you going to live there? If you're going to live there, you're more likely to pay back that loan because you need a place to live. You don't want to be kicked out. Is it a vacation home? Is it a second property? Is it a lake house? Are you buying it for your kids to go to college? Are you moving mom and dad next door? That all factors in. And number three, the collateral. Is the property eligible for the loan? And the appraisal will determine the value of the property. So is it what you agreed upon in the contract? Does it meet that value? Mistake number two, not getting a pre-approval. So pillars of a mortgage approval are credit, income, and down payment. So loan pre-qualification. Pre-qualification helps you determine how much you can afford to spend on a home based on these three factors. Number one, your credit score. What does your report say about you and what are the total debts? Your credit score is a numerical value of how risky it is for a bank to loan to you. The higher the score, the lower the risk. The lower the score, the higher the risk. Number two is your income. So your employment history and your income calculation. How much are you bringing in each month? How much can you afford to put towards the house? Number three is your assets. And this is money used on your down payment and closing costs. Do you have enough to make that down payment and closing costs? Also is in the assets, they factor in reserves. Like how many months reserves do you have should you lose your job? Pre-qualification can help you determine what house you qualify for. You don't want to be going out there getting under contract for a $500,000 home when you're only pre-qualified for $350,000. You start to get into an area of losing earnest money and option money, and no one wants to do that. And it increases your bargaining power when negotiating with a seller. So when Todd puts in an offer for you, I'm going to give him a letter that says you are qualified for that specific home. You're qualified to buy that specific home. That way the seller knows you've already talked to me. You've already gone through the process. They don't have to wait on all of that. It's a little more reassuring to them. And Todd, I mean, you know more about this than I do.
Definitely. So I've had people out looking at $400,000 houses, and they come to me, they want to go look at these houses, and I ask if they're pre-approved. They say, not yet, or don't worry about it. We're going to get pre-approved very easily. We qualify. And then later on, we get them pre-approved and it's below 400,000. I've had it go all the way down to from 350,000 to they were only qualified for 235,000. And imagine what that does looking at the really nice houses and then getting qualified for almost half as much. And then increasing the bargaining power. If you have a really strong loan, then it's going to help you out a lot when we're bargaining on the prices and everything. Estimate your monthly payment and total investment. Blake is more like a financial advisor than just a loan officer. He's not just going to throw out a number. Hey, you're approved for 350,000. Go buy whatever you want. This is your monthly payment. He's gonna pack in every expense that's going to occur monthly, so you'll know exactly if you can afford it or not. We don't want to get people into houses and get them into a bad situation. We really don't. And identify which loan products will fulfill your needs. There are certain houses that only take certain loans, and you could be looking at the wrong houses. If you want to put in an offer on a house, you're going to need to be pre-qualified or the seller's not going to take you seriously.
Loan pre-qualification. So tips for a simple loan approval. Now, these do help you get approved for a loan, but these don't stop there once you're approved. These are things that you should do through the whole home buying process. Number one, call us if you have any questions whatsoever. At any point in time, give us a call. And just, it doesn't matter. We do this every day. We hear a lot of questions, a lot of the same questions, a lot of different questions. Every question you have, call and we will get you an answer. Continue living in your current residence. You don't want to be homeless and stuck in a hotel while you're waiting on your home to close. Continue paying your mortgage or rent until you get it closed. Make sure that you're up to date on everything and continue to use your credit as normal. Do not go overspend. Make sure you're making those payments every month, and keep working at your current employer. Now, sometimes people have to move for work and we can work around that, but it is easier on you, the buyer, if you stay working at the same employer. Keep the same insurance company. They know you. They know what you like. They know what you need. Now, if you want to shop around, we do have an insurance agent that can help you with that. Make sure to stay current on all existing accounts. Again, make sure all those payments are full and on time. Expect requests for additional documentation throughout the process. Like I said earlier, all we needed a letter of explanation for some things. So let's make sure that I'm going to need certain things as we go. Don't make any large purchases. Do not go buy that car on the way to closing. Yes, that new car is going to look great sitting out front of that brand new home, but let's make sure the loan is closed and funded and then go buy that car. Don't change bank accounts or make any large cash deposits. Don't transfer balances. Once money starts getting moved around, we need to know where it's going, where it's been, and why. So that's a lot more work for you, the borrower, doing that. Don't close any credit card accounts. This can definitely hurt your credit, and we need to keep your credit intact and whole. Don't consolidate your debt onto one or two credit cards. Again, now you're messing with your credit. We don't need to do that. Plus, you might mess with some DTI. Don't apply for new credit or take out new loan or co-sign on a loan. It's DTI and credit again. We need to keep those right where they are. And this last one you really should never do. Never max out or overcharge on your credit card accounts. Number 3, using your bank. Bank penalties are expensive. We all see it every month on our accounts. They slip in these little fees here and there that we were unaware of. But most banks will charge an origination or discount point. Well, in the market we're in now, most everybody is charging an origination or discount point. With that in mind, banks are charging more than your bank is charging more than a lender like I am. In large banks, you're just one of thousands of clients. To them, you're just a number. You might know the teller by name, and you show them pictures of your kids, and you have small talk, and you see them every week when you're depositing. But they're not the ones that are going to be doing your loan. It is a loan officer for that bank. And, Wells Fargo services my loan, my mortgage, and I've never talked to the same person twice, not once. So definitely keep that in mind. And large banks typically have stricter guidelines that will not cater to specific situations outside their general box. If you don't fit in that nice tiny little box that they like, they don't want to work with you. And a lot of that is too, they don't want to go that extra step. They've got a lot going on at all times. And they don't want to go that extra step. And large banks may not offer down payment assistance, which is an extra step. It is. So
yeah, so your home bank doesn't have to disclose what they make on your loan. You may pay more than you need to if you don't shop aggressively. If you're using your bank, I would highly recommend to compare all your loan terms with Blake as well. It's a little extra work, but a fraction of a percent can sometimes cost you tens of thousands of dollars, and it's definitely worth the work. So
absolutely. Number 4, buying directly from a builder. So the truth about buying from a builder is closing cost assistance can be big for higher interest rates, which cost you more in the long run. They do put out these, $5,000, $10,000, $15,000 incentives to help you get into the home, but a lot of times that money's built into other fees. And number 2 is a realtor works for you and a sales agent works for the builder. Keep in mind, Todd and I, you don't pay us, and we don't make any money on the deal until you are in the home that you choose and closed. That's how it works for us. The sales agent, their job is to put people in homes, is to put people in the builder's homes. Doesn't matter who. Our job is to put you in the home that you choose. So we're working for you to make sure we hit your goals. Sales agents want to hit builders' goals. And a realtor can help you make the best decisions financially as you build. And Todd, you've dealt with these sales agents and builders more than I have.
yeah, so to start off, to hire a realtor, to hire me to guide you through the process is completely free from start to finish. Me representing your interests will help you make sure you're aware of what's included in the base price and what's extra if you want to add some new things. I do have a background as a builder. I know hundreds of builders around DFW. The quality of construction, how familiar are you with the builder? What's their reputation? What's the quality of their construction? The contracts, how familiar are you with the real estate contract? Do you know what to look for to make sure you're receiving all the benefits you're supposed to receive? Are you aware of any hidden fees or community fees? A real estate agent is an expert in the industry who is there to provide guidance throughout the whole real estate transaction. Register at the very beginning when you go. If you're going to go to look at new homes and they want you to register, make sure that you add that I'm your realtor or you have a realtor and write their name down. You want to be sure someone's looking out for your best interests. Tell the builder on your very first visit that you already work with an agent. The commission won't change the price at all. But if you don't tell them the first time and you go in, let's say a few weeks later, and you start writing up contracts, and then I go with you as the realtor, they'll say, oh, some places will say, well, you didn't say you had a realtor the first time you registered. It's pretty crooked, really, because they don't want you to see all the contracts, to be able to write down exactly what's wrong, to do pre-inspections, looking at the house before it's, while it's being built, and then after, and writing all the problems down. There's a lot of things they try to trick you on. And mistake number 5, skipping a home inspection. Like I said, I do a pre-construction walkthrough, or if you're buying a used house, I have equipment to test the foundation, to test the plumbing and go through with the camera, to test the air conditioning systems, and the drones for the roof mainly, and for also taking pictures of homes. Skipping a home inspection could cost you tens of thousands of dollars. And this house on here would probably just need to be bulldozed down. I don't think you would get an inspection. You purchase a house unaware of deal breakers. You lose your negotiating power. You risk inheriting non-structural safety issues such as mold, radon, and carbon monoxide. You also miss having a forecast of future repair costs. You're oblivious to illegal no-code additions and remodels. So what we would do is, like I said, When we go to look at the house the very first time and you like the house, I'm going to do a walkthrough video. I do a real nice walkthrough video so you can show your family and friends and look back on it. And then I'm going to do an inspection of the house myself. It's not an official inspection, but you can find out if there's any problems before you actually put an offer in and sign the contract. You miss having a forecast of future repair costs. That's actually something that we can negotiate with the seller after we put the contract in is accepted. We have an option period and we say, this needs to be fixed, this needs to be fixed, that needs to be fixed, because the inspector has a report of what we need to fix or what's optional to fix. Or a lot of times I've made homeowners file their roof on their homeowner's insurance, and my clients have a brand new roof before they move in. And then illegal no-code additions and remodels, turning your garage into an extra bedroom, closing in the back porch into a sunroom, things like that. You have to have permits from the city, and if you don't, the buyer could be fined, and the seller could be fined. It's not a small deal.